Hello and welcome to another episode of Altcoin Thursdays. I'd like to commend those savvy of you in our audience who realize that you can make the market even more efficient by dumping on Thursday even before the episode comes out. So rather than waiting for Altcoin Thursdays to be published and selling then, you've started being more efficient and bringing the market more in line by just front-running the event and dumping in advance. Congratulations on your discovery. That's some real efficient trading, and enjoy the free money. The Altcoin Thursdays dumping joke is becoming a bit too real for my liking. It's certainly an interesting relationship that this show has with the broader market, but there are some things I want to cover, and if you continue to enjoy this show, price action aside, leave us a comment on what you think, and if you want to see more episodes, I don't mind canning this for the sake of the market, and leave us a like so we have some sort of indication for demand on this specific series. What Don and I do is just look through the likes on different stuff we do, Monday markets, Wednesday, Casual Friday, etc., and then kind of decide on frequency and content. So just that's useful feedback for us. With that preamble out of the way, even off the bat, it's a bit of a curious spot for the market because these correlations that I'm highlighting are rather unusual. Specifically, I'm referring to the fact that BTC is down 3%, almost double that of ETH, which in itself is unusual because ETH tends to be the higher beta play. But then some of these altcoins, or even I dare say most of these altcoins, are down less than BTC itself. So there's some very aggressive selling going on BTC that's pushing it out of line and breaking some of the regular correlations. So that already immediately raises my eyebrows because, again, all the usual relationships are broken, whereby, BTC and the majors will lead the market, and then ETH generally acts as higher beta, so pumps and dumps more, and then altcoins are the highest beta and dump a lot more and pump a lot more alongside the rest of the market, all of this being a sort of positively correlated basket. Instead, we've had a bit of a strange relationship where BTC was sort of, before it dumped, alts were shaving off more than you would expect, and now that BTC is actually dumping, altcoins are oddly enough holding up. I don't think that's necessarily you can draw massive conclusions from that. My gut feeling is that if this continues, altcoins will just simply catch up. But I think the most confident inference from this is that there is an aggressive, almost sloppy seller in BTC at the moment, and that's worth monitoring. I saw some headlines about Voyager liquidating assets and the US government sending some coins to Coinbase and all that type of stuff. So there is plenty of supply in the market, but I would just keep an eye on how these correlations develop, because at the moment they're unusual to say the least. Maybe we see a bit of reversion on BTC once the sloppy seller is done. But otherwise, yeah, not too keen on stepping in front of it, as you can imagine, even with these. I mean, this might just be fake relative strength / lag on altcoins is kind of my rebuttable presumption. And if it turns into something stronger than that, like the BTC seller stops selling so aggressively and altcoins mean revert, I can see that as well, perhaps slightly less persuasive, but those are the two things I would monitor. In any case, despite Altcoin Thursdays being a consistent Pico top signal, thankfully the messaging within the videos hasn't been bullish altcoins, which is nice. Don and I are far too European, humble, and filled with imposter syndrome to take proper victory laps. Okay, probably more so Don, myself than Don. He likes a good victory lap, but I would as well if you saw the state of his comments. Nonetheless, you'll recall that the reluctance to care much about these came from the fact that the market was just at high time frame resistance pretty much the entire time. So the initial concern, and we will talk about the coins in the watch list here, but just to frame where we are, the initial concern about being bullish altcoins came from the fact that the market had rallied into monthly resistance, and we were speaking about it when the rally took place, we were speaking about it on the monthly close, and we were speaking about it as the market traded below the monthly open as well. So that barrier has just proven to be meaningful, and I think in order to pay appropriate respect just to how technical the monthly time frame has been, if anything, that sort of increases my conviction that we will trade from monthly to monthly. And as you know, the earliest iteration of that is this 20.5 to 19.5-ish monthly cluster. This could be one of those simple cases where the chart trades very technically on the higher time frames, but it just takes so long that people lose their minds in between and are stuck on the 5-minute. That's sort of the discipline that's required to trade the higher time frames. A lot of times you've just got to wait. Even if you have this resistance mapped, that's sort of, 2 months at the very least before you start getting the rotation in the direction of resistance, right? Or in the direction of support in this case. But in any case, like 2 months waiting for the market to do something at your level. And that's not for everyone, right? So that's sort of the pitfall of higher time frame trading for a lot of participants. But sort of base case is that given how good these monthly levels have been, both on a technical level in terms of respecting support resistance, and also on a candle close level, so no fake out, no nonsense happening in the interim, I feel, I've always felt strongly, but now probably conviction is increased to the fact that we will just trade from monthly support to monthly resistance. I would find it quite strange if the monthly time frame could stay so technical and not at least wick or touch the monthly level of support around sort of, as I mentioned, 19.5 to 20.5-ish. That would be rather strange to me. One other observation I'd like to follow back on is the previous month's low, which is the level we discussed on Monday markets for, if there's going to be any sort of spike, trap, SFP, failed breakdown, that's the level to watch. I still think that's worth mapping. Certainly on the weekly time frame, we have 3 days to go. God knows how this will develop, but I would keep abreast of where this level is. And you can tell I was born in the 18th century because I just use the term keep abreast of. Nonetheless, just to sort of move on quickly to the altcoin side of front, I did want to give an update to the majors that it's been a story of, hey, we have a new altcoin show, but the market is at monthly resistance, so I think altcoins are bearish. And thankfully, at least that much has played out. And if that was helpful in some way, leave us a comment. But otherwise, the technical view is pretty straightforward. Even on the daily time frame, when we spoke about this move here on Monday markets, my argument was that we've already had one fake breakdown and that this one was more likely to be real. And you can now hopefully see why I love this setup so much when it comes to double fake outs don't happen. It's bread and butter, works both for support resistance, works across all time frames. It's something I give a lot of weight to. I think that's all I really want to mention for BTC. Where the high time frame levels are. I think they're worth waiting for, pretty much. Like, if you've waited this long not to front run anything, why do it now? I want to see these very odd looking correlations resolve in one way or another, because they are completely abnormal, and so some sort of clarity there would be nice. But purely technically speaking, this is our monthly area of support. I'm very reluctant to front run it or do anything in the absence of trading there. The earliest contrived case for doing so that I can come up with is if trading into this daily cluster is enough, right, this daily support, resulting in an SFP or a failed breakdown or some sort of spike reversal pattern at the aforementioned 21.4 previous month's low. And even that view would be very sort of short to medium time frame based, as a kind of sloppy seller on BTC oversold into support bounce. It wouldn't be as high probability or as structural or as important as trading monthly levels. As far as BTC goes, I'd watch the daily cluster and previous month's low. That would be the first sign of a bounce. Absent that, given how good the monthly time frame has been, I would say waiting for the monthly time frame. There are worse ways to trade this market. Now, with that said, let's contextualize some of those views given altcoin levels, and I want to talk about a few. And again, this is quite tricky to do because we're dealing with rather anomalous conditions when it comes to these sorts of correlations, and also given the sort of technical picture that we have in BTC. But nonetheless, I do want to just flag up some levels to have on your radar, and that's kind of the best I can do at this point. Wow, that sounded very self-defeating, but nonetheless, Cardano is one of them. I mean, this downtrend is insanely aggressive. You can just slice a diagonal through it, and it's been infinite sell pressure. I would say the only meaningful structure this thing has left before basically retracing the entire momentum, if there's going to be some sort of support, higher, low, bounce, whatever, or as always, the normal caveat applies that if you want shorter term trading levels that tend to be more decent than not. For Cardano, it's this daily cluster at around 30 to 31 cents. The structure there is pretty straightforward. This was the last range before the nuke that made the bottom and then provided no resistance on the way up, right? And then so you now have a rounded retest into that level, not at the lower boundary yet, which would be the extreme of the extreme, but basically I like this structure because by definition it's an extremity. If there's going to be any sort of bounce, it kind of has to come from here, and even if there isn't, you know that there isn't a ton of support built below, so that's a good line in the sand inflection point to flip on. So that's one I'd bear in mind. Again, worth being careful and maybe even waiting for acceleration for this thing before fading it, because these sorts of slow bleed and drift type of things, stepping in front of them is generally a total nightmare when it comes to trading. So you'll have heard Don talk about like these patterns where the market drifts and then breaks up. A lot of altcoins basically have the opposite problem where they're drifting down and then you're just kind of waiting for the acceleration leg to fade. But in terms of levels, I mean, it's quite helpful when there's pretty much only one, and that's sort of what we're dealing with Cardano. Said with twice, whatever. AVAX, another one. The last daily level we spoke about was this 2136 level. It's pretty much been down only since then, although I don't think we talked about it at the top. I think Altcoin Thursday came out when? Thursday. On this candle here, coming off of that level. Nevertheless, it's been down only. I want to talk about the most recent daily close. This looks like a break and retest of this range high that I've superimposed at about $15.5. You could also just kind of draw out this cluster at the bottom of the consolidation or preceding the rally, again up to $16, and have that as your inflection point. So anything above that is evidence of support doing its job or whatever. But in terms of what we have available at the moment, it looks like the daily closed back within the range, and retested that same structure as resistance. So unfortunately, AVAX looking like a bearish retest on the daily time frame. Again, these wacky correlations could mean that you get spiked and all sorts of stuff can happen. But purely technically, given what's in front of us, this just looks like a breakdown and retest on the daily time frame. I'm not terribly keen on the market trading back, looking for sort of bullish signals with the market trading back within the range. As you know, ordinarily when we have a range, clumsily drawn as it may be, and the market sort of breaks out and then breaks back within it, that in itself suggests the breakout wasn't accepted, which is bearish, and then when the market's back within the range, you're typically targeting the midpoint or point of control in the range and then the range low. On this occasion, we don't have the luxury of having my English is so bad, I apologize. We don't have the luxury of dealing with particularly clear midpoint and range low levels. To me, it was really a case that it's either this $15 holds for some sort of bounce, or it's sort of choppy garbage, far less defined range in the 11s, 12s, and 13s. I'd pretty much just be using this as an inflection point, and then if you really wanted to superimpose some structures on this thing, I'd probably use $15 as the range high, and then maybe this first swing point at 11 as a range low, and you get some sort of midpoint at $13, $16, what have you. You could take it all the way down to the low, but when I'm mapping ranges, I don't like taking the highest high and the lowest low in all cases, especially when the lowest low is formed as a failed breakdown of sorts, right? So to me, it's much more likely that the range low is sort of somewhere around 11, 12, and that this move lower was the deviation of the original range. And so I don't like to use the extremities for my boundaries in all cases. Nevertheless, this is all just TA nonsense malarkey. More important point, that there's a clear pivot at $15 up to $16 on the daily time frame. That looks like resistance, and nothing terribly compelling below that as far as support structure goes. Can I even make something up? No, not really. So that's what we have. Also, hopefully this makes the point clear in terms of how I pick the range boundaries. Like, why would I use this low as my range low when it's much more likely that the clearer level is this sort of support. This was the deviation, and then this was support again before a massive move up. So using that level as an anchor makes much more sense to me than just using the lowest low as my range low. Maybe that's complete incomprehensible, unintelligible nonsense, but I'm sure one of you who likes their price action will be able to make sense of it, hopefully. DYDX for some reason is up 4% on a day where Bitcoin's down 3.5%. Again, just kind of clown world as far as correlations go. Up 4% as it may be, more is required, I think, to fix the weekly time frame on this thing, which we spoke about at length. As far as this breakout, tried, and this also may be a useful pedagogical point, at least as a reminder that I really don't like breakouts that don't go anywhere. I've tweeted about this an endless number of times in many different ways about aggressive breakouts being ones that either retest for a very short period of time or don't retest at all. So when you see a month of consolidation at what should be an aggressive breakout level, it's not looking good, bruv, right? And so even with the most recent weekly close, and I know some of the audience caught this because I got a couple of DMs suggesting, oh, is this a deviation, so on and so forth, even on the weekly time frame, especially for a level that has been so technical with the candle closes. Last week closed below, and it's that same example of the market puking, failing to break out from the range high, closing back within it, and then at that point you have to target the midpoint and the range low of the consolidation. So nothing positive to be said for DYDX at the moment. I could cope and say, look at this relative strength. If the rest of the market bounces, it'll bounce harder. That's plausible. But even if it bounces harder, it'd be a bounce into weekly resistance. So, what good is that for bulls? I think now that we've had a failed breakout, at the very least, it's so bearish that it might be bullish in the future. How is that for some cope? That's some grade A cope. But it's also said with some seriousness, because as we discussed at the beginning of the show, something that I love to trade is the failed breakout double thing doesn't happen too frequently, right? Or double fake outs are rare. We've had a fake out. So if in the future, after whatever happens in this range, DYDX and comes and closes back above the range high, having already faked out once, I think that's a slammer. And that's probably going to be a very good trade. But at the moment, it just looks like a failed breakout. And the midpoint levels and the range low, I think, are decently self-explanatory. Here they are, if they are not. And I think even if it rallies this week, save a weekly close back above $2.50, it would still be a rally into resistance. And you can see a bunch of confluence there as well. This is the weekly level, and there's like a cheeky daily cluster that's currently resistance as well, just below that at between 240 and 250. So that's what I'd look out for overhead. As far as Phantom goes, unfortunately, similar story where the big retest levels on altcoins essentially ate shit. And this is why just BTC and ETH trading is so useful and why we drone on about it so much and spend so much time talking about BTC and ETH. Because even very good technical setups on altcoins will periodically, or in our view consistently, get invalidated by a high time frame weakness in BTC and ETH. So yes, this looked like a fantastic breakout and retest, but the reason I wasn't too keen on it, as you'll know from other Altcoin Thursday episodes, is because BTC and ETH were at resistance. And you can also listen to Casual Friday, where Don was asking what I thought of those altcoin setups. And my argument again was, well, BTC and ETH are at resistance. I can't. I can't bring myself to do it, especially if I want to be trading these things for holding periods of days at the very least, and not sort of quick intro hit and run type of stuff. But yeah, unfortunately, a similar story here where this just looks like a close back within the range and a failed breakout, which isn't particularly nice. The range in itself is probably something akin to the following. This is a bit messy, but again, it's really it's the extremities and the boundaries that matter more so than anything else. I think the same consideration would also apply to Phantom as argued for DYDX, which is now that we've already had one failed breakout to the upside, whatever this thing does, if it were to come up and try again, that second effort is much more likely to bear results than the first one. Or at the very least, it's much less likely to resolve in the same way. So for a lot of these charts, while yes, they do look rough and have failed breakouts in the high time frames, with enough time, unless these go to zero or whatever, these are future high probability bullish setups, and then you can just trade the standard double fake out strategy, which we've talked about at length. So they're still worth having on your watch list. If not for trading the range that they've closed back within, at least for the future opportunity of the breakout that's hopefully going to be more successful, or I think probabilistically is going to be more successful. The graph, I mean, same story, right? Clear retest level, eats shit. What are you going to do? So a lot of these altcoins looking rather similar in terms of structure and not, they haven't pulled back to particularly clear levels where you'd think, yeah, I'd want a piece of this now, and it's at least at the range midpoint, if not the range low. Like generally speaking, and you can apply these to whatever alts I haven't included, a lot of altcoins kind of look like this at the moment, where they broke out, didn't find another leg higher, and then fell back within the range. The earliest reasonable area where you can do business is the midpoint of the range. This is the earliest, and even then it's a bit of a gamble because you're diddling in the middle. So typically the midpoint is something you'd play for a short-term bounce, or you'd buy if the market is really, really bullish. Otherwise, I think the better options, again, midpoint for short-term trading, fine, but when the market fails to break out and trades back within the range high, your eyes should be set towards the range low, because that's the highest probability, most risk-defined area to do business, and also just generally a good target to be aware of when the range high fails, the range low comes into play. So for a lot of altcoin charts to look like this, which again, I surely haven't covered, given we're talking about just a few, if you're going to do business anywhere, at least the range midpoint, the range low if you get it, and then in the future, the reclaim of the range high. Hopefully that's straightforward. Now again, I'm not talking about short-term asynchronous like open interest pukes and scalps and 1 hour, 5-minute ranges and stuff like that. But for the purposes of our weekly show, I think that's a good approach that won't get you caught on the wrong side of higher time frame rotations, because that's sort of what is happening to a lot of participants in BTC and ETH for the time being. Hopefully not for our viewers of Technical Roundup. Although if you are, it's Don's fault, not mine. I'm joking. I don't mean that. It's too late to start re-recording this video. I've spoken for too long. Love you, Duck. In any case, other charts. Again, prime example, Lido, right? Sort of last week closed below, back inside the range. And so the earliest area where you could justify doing business is the range midpoint. And then the expected area, or at least the high probability target, is the range low as well. And by target, I don't mean just market sell it and target that. I just mean, if this range is going to continue to play out and the market has just failed to come off of one extreme, there's a decent chance that it trades the other extreme. So it's not advocating for a setup per se. It's just having a revolving scale of probability of which levels are likely to come into play. And whenever the range high fails, the range midpoint and the range low, by definition, come back into play and should be considered. So that's that. I don't think we'll get any more clarity from talking about lower timeframes given how choppy this thing was. But essentially the higher timeframe structure is the same. Litecoin, the coin that's going to ruin my friendship with Don because I was fudding $100 as resistance. So all hail weekly resistance enjoyers. We finally get one win from Don out of the 200 that he has over us when he just ignores our levels and makes 10 times the money. In any case, resistance resisted, and now the market's going down. I think the earliest iteration of weekly support that would be somewhat reasonable is the sort of $80 level, or maybe $76 to $80 level from this previous high, and it was the last little point of resistance before the nuke. So it's getting there now. I think this is also the area-ish where Don has his higher time frame invalidation. I think it's based off of this high, 76-ish. But in any case, that's kind of the first trouble area for this rotation. But again, I personally, I think for him it's a trade management thing, but I don't like any of this. I don't really like Litecoin either. It's all coming out now. But yeah, you can't particularly get me excited about this, or you can't get me particularly excited about this, because I think other charts just look better and have better structures. I think 100 was a good level in terms of like, oh, where do you think a nice high low could form or whatever. Just far less compelling on the Litecoin front than other options, I think. But from a weekly perspective, around 80, 76 to 80 is at least the first obstacle, if you will, or trouble area, more specifically from this 100 rotation. And that in itself, I'm not going to do the percentage measure because I just realized it's from 100, so the maths there is quite easy. I won't insult your intelligence, but yeah, those are the levels to bear in mind on LTC. Again, slightly less clear than some of the others we're covering. Matic, Twitter's favorite coin, I'm sure, has been also having not the best time or publicity, courtesy of my British range trading colleagues. The only point I'll make about Matic is that I would keep an eye on, like, where is support is the question, right? Because this thing is dumping and maybe you're in shorts from higher and looking to manage or do whatever. I mean, you could just hold it to zero if you follow a lot of Twitter commentary and want to align there, that's fine. But realistically, I think there are a couple of levels that are at least interesting. For me, around $1 just makes sense as a trouble area. Even if you think this thing is ultimately going much lower, as a short to medium term trouble area, that makes sense to me. Sort of nice round number, but also we have a weekly structure there. Similar to the type we spoke about earlier in the show, where you had sort of resistance, failed break, resistance, and then the real break. So that on the weekly time frame chart, that is where the support is. It's not this level for me. It's actually the $1 one. Plus you have the round number meme. Obviously, if that fails, then you pretty much just target the lows and whatever. It just won't look good at that point. But from a level to level point of view, I think it's finally reaching something akin to weekly structure. Closer to $1 is what I would watch. If you prefer that view on the daily time frame, it's basically at the same price. It's just some version of this consolidation, which I know is a big box. Again, you can just take the range high, the range low, and look all smart doing it, but realistically it's the same type of structure, which is impulse, consolidate, impulse, as you'll be well aware, and it's this impulse, or this consolidation rather, that comprises the weekly level. So that's where I'm watching, at least. But yeah, again, just like many of these altcoins, very rough, very aggressive sort of downtrending action from the highs. So don't fade a boring market, or the drift for that matter. Solana is not having a great time. The weekly reclaim we talked about, again, never really materialized in the way that it could have. The market kind of just kept getting stuffed at this range low. And we talked about a potential impulse through, or, if you get like a daily candle, which wipes out this consolidation, looks really strong, never really happened. Just this congestion area was a complete nightmare. The best it could do was just SFP the high and dump. So that's never a good sign if you're looking for a breakout. So yeah, not a particularly good look. I think on the weekly time frame, if you're going to be fishing for some sort of bounce or higher low structure, I still don't mind taking the sad solitary red weekly candle because it was so respected on the way down, and that comes out around $14. I'm sure you could just be somewhat charitable and box out this entire pre-breakdown consolidation between $12 and $14 ish, and say that that's the weekly structure. If it's not going to go to yearly lows and go to zero, and even if you want to short-term trade it for some sort of bounce, that's the support level that makes sense. Otherwise, on the daily, I mean, honestly, like, I think the weekly is particularly clear. On the daily, the earliest I'd be comfortable with even just drawing a level on the thing is up to 17.6, which is where the market is trading right now, more or less. Similar to the AVAX level, if anything, just it's still above it rather than below it. I think AVAX is retesting from the underside. I think that's okay. Maybe for short-term bets, it's a tradable level. But for me, the higher conviction punts would have to come from weekly structure towards the range low at that extremity. But I would just map this to inform your short-term price action trading, because it's probably not completely useless. Even if it pukes and tests the underside, I think it's the nearest pivot we've got. Like, a lot of these altcoin charts have basically been, we're going to bleed out into fucking nothing. And for a couple of them, we're now reaching the first iteration of what could be something rather than nothing. And so those levels tend to be good to trade one way or another, given just participants keep getting blown out trading in the middle of nowhere. And then you finally get a tradable reaction if you are patient enough to wait for the higher time frame area, which is what we've sort of discussed for a lot of these. So that's the daily one, and probably the earliest where I could say, yeah, there's some structure here. But anything with conviction would have to come from this weekly level. I think that's all I've got, really. Hopefully this episode was helpful. If it was, again, we would always appreciate your feedback. Leave a like, leave a comment, do whatever. BTC, in the meantime, has not enjoyed our show, but here we are. And Casual Friday will certainly be a fun one tomorrow with the Duck to discuss all of this weird stuff. So yeah, thank you for watching. Hope you enjoy your Thursday, I guess. And see you tomorrow for the rest of our content. Take care and bye-bye.